Talking like they go. Just don't provoke me, cause I don't need no cellmate. I'm in a two-seat, doing drops like a mailman. This ain't no hoopty, ass she riding, she's a hell yeah. No, I won't lose sleep about no pussy, I'm like farewell. Yeah. I'm outside. I know how it feel to see your homie switch sides. I know how to put that Rolls Royce shit in drive. I know how to load a clip and shoot, we gotta ride. You ain't gotta lie to me, baby, no. You know it's a vibe every time we catch him off sides, he won't make it, no. Money on my mind, I can't get it all. I've been outside,
but I'm inside Trupod Studios at the crib. How y'all doing? I know you had a Merry Christmas, but you know you got to come back. I know it was Monday's show that was a little bit missed. It was, I had to recover, man. It was the holidays, but the best part of waking up is Trupod in my cup. Man, the cafecito's good. I'm feeling good. The holidays were great. A lot of spending, though, right? A lot of spending, man. And that's one thing that I probably was going to touch on and concentrate on. But it looks like we have a special guest today who popped out, beating his chest. You guys in the Truthful Taxes Partnership know him as the Gorilla. Let's bring them all. Abdel Khawatmi. And look, he's going to beat his chest if I mess up his name again. But Abdel Khawatmi. Oh, my God. Let's bring the Gorilla on.
What up?
What's up, champ? Listen, I'll let you not murder the name and directly say it from the horse's mouth. Abdel, welcome to the show. We're here on Trupod. There's just so much information, man, that we are benefiting from the times that you have come on to the podcast, and we really appreciate you and the way you deliver the information. I know that recently there's been a closing with one of the tax partners in her home. And, it's just very, 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 it's motivating to see these things happen. And of course, friends of yours that are, owning a home and just raving about the process being easy, and that the process, when you're going to purchase a home, a lot of the times, the buyer might not be aware of certain things, and that could kind of like create a sense of anxiety, of mistrust. And I think that the way you do your job, bro, is just amazing, man. And I want to highlight some of the things that you are doing and that you're privy to, the information, obviously, because you're always giving us those tidbits of information that maybe will save us thousands of dollars in a purchase of a home. So
100%.
Go ahead and come in, man. Beating your chest, wherever you want to start, bro. We can go ahead and start.
Yeah. Well, first off, I appreciate you having me on, most importantly. So again, my name is Abdel Khawatmi. You're not the first. You're probably number 3,200,000 who's butchered my name. But we've been blessed in this business. I got into this business a little over 6.5 years ago, not that long ago. I've been running a branch, the Got Mortgages team, for that entire time simultaneously. We're from Jersey. We live down the shore. We do lend throughout the entire nation. And one of the things that I always say is, in this business, it is, you mentioned it best, right? It's the process that allows us the ability to be hyper smooth. And that is just so uber critical, that we make sure that we have those things set in perspective, because every single consumer's process from everything, right? Mortgages, real estate, whatever the case may be, is going to be different, right? You're going to have some situations where, some clients are W-2s. So it's super, super straightforward, right? You look at the W-2s, you look at the income, it's black and white. Am I lagging a little on the video or no?
You are lagging a little bit. That's latency.
I'm going to change the webcam. It's not as clear, but I'd rather hear it from my
mouth. No, you're good. That camera's pretty cool too, man. I know it's not as clear, but you're getting good, clear picturing and sound now.
Awesome. So going back to it, right? So the most important thing that I think is very critical for a consumer to be educated about the process.
Yeah.
Because the one thing about the process is it is black and white, right? And that's kind of why I love my side of the business. 1 + 1 is 2. I don't care how you cut it, toss it, turn it. The numbers add up. You qualify, you don't qualify. If you don't qualify, that's okay. We're going to prep you, whether it's waiting another year, and then put you guys in touch with partners like yourselves who are going to strategically advise you how you should file your taxes, right? Now, if you're self-employed, I would say a lot of consumers that I talk to who are self-employed, get hurt by that. Are you saying something? I want to make sure I hear you.
Brother, I'm listening to you, and it's interacting with different interfaces.
Oh, got it. Okay, cool. I love it. I wanted to make sure. So it's so critical for us to make sure that the client is educated, the client is prepped. I'm a little, I say it, and it's probably a better word for it, but I'm a little stingy with my pre-approvals, right?
Wait. What does that mean? You're a little stingy with your approvals.
So like, I need to make sure I got your financial documents. I need to make sure you're fully vetted. You tell me you make $100,000.
Real quick, just because here on Trupod, we do speak to the average guy. Sometimes lingo might slip through the cracks, and we might not understand what you're saying. But when you're saying vetting, obviously, what does that mean in your process?
Yep. So great question. So let's bring it back a step, right? What do we look for when you're qualifying for a mortgage? How about we start at that, right? There's something called the 4 C's, and I shared it on our podcast not that long ago. We take a look at the client's credit score. So your credit is comprised of your utilization, your payment history, your mix of accounts, and just a collaboration of how your mix of student loans, car payments, stuff like that is, right? Obviously, the higher your credit score, the better of an eligibility you have, and the more accessibility you have with other programs, right?
So your debt to income ratio is a factor in all of this also.
So the debt to income now is called capacity. So we're going to look at how much you make, right? If you're W-2, we take a look at the gross income. If you're self-employed, we take a look at the net income, like we said last time.
Okay, so there's a difference. There's a difference,
huge
right?
Difference. So if you're self-employed, it's so critical that you meet with a mortgage professional first, understand what you need to strategically file, get the advice of a tax preparer, get the advice from Truthful or your accountants, and make sure that what you're filing is not going to hurt you. The last thing you want to do is to amend taxes. It's bringing up too many red flags. You're opening yourself up to too much exposure. There are certain things that you can also have done if you're filing self-employed. You could put things in depreciation. Depreciation doesn't necessarily impact your taxable income, but us as mortgage lenders can add that to your income. And especially if you own a property too, because that's where a lot of people tend to. I just had a client yesterday. She owns a property in Baltimore and a property in Jersey. The realtor wanted to sell the property in Jersey, right? And they wanted to keep the Baltimore house. They do not qualify because they're taking massive losses on the other property. And even if I add back certain things, taxes, insurance, depreciation, and one-time expenses, they still were gaining a negative loss. So not only would they get hit with the mortgage payment, they would get hit with a negative loss. So again, the importance of preparing, and that's where I say I'm stingy, because there's a lot of other professionals out there, man, who they're like, oh my God, I got a client. Yeah, dude, you make 100. All right, here's your pre-approval. And then they're doing the vetting either after you found the house or while you're searching, which the realtor ends up wasting a lot of time, right? And the client, most importantly, right?
So there's a risk. There's a risk of the buy not even happening because of speeding things up in such a way, huh? So as a buyer, I should be aware, right? Anybody that's trying to do processes fast, that are not really explaining things and really trying to rush processes, that should be sort of like maybe a little red flag to ask more questions. Am I right?
Yeah. If you have completed a mortgage application, they've run your credit, whether soft or hard, and then you've simultaneously given your financial documents. If you've checked off those 3 boxes with your app, your credit, and your financials, you can issue a pre-approval, right? It's just so critical. Now, listen, if you're a salaried employee, W-2, and you confidently tell me when I'm having a phone call conversation or a Zoom consultation with you, and you tell me you make 120, I might be a little bit more lenient to be like, all right, well, this guy's confident. He knows what he makes. They're whether they're a teacher or they work for an establishment. It's pretty fixed. There's not going to be any surprises. Right?
Exactly. W-2s usually are more secure in a sense.
Yeah.
Business owners do. It doesn't tell a lot more ins and outs and accountability, I guess.
Yep. Exactly.
Okay, so you're going through the vetting process. Okay, my credit's fine, my utilization's good. My overall credit is hitting the right pings, and now I'm approved. What is the next process after
Now
that?
the fun part, you start looking for a house. Now, what I like to do is I don't give you that piece of paper and say deuces. Right?
Wait, Gorilla, wait. Let me beat my chest real quick. You just said now we're gonna start looking for a house. So usually I from what and I'm not a homeowner yet, and I'll probably get my house with you. So I'm gonna say, after you're pre-approved, then you start looking for them. So do you have buyers that usually come to you already saying, hey, I want that house?
100%. I get it all.
And have you ever broken hearts that you can't get that house?
Dude, constantly. I mean, this year, 2023, was by far the most prevalent year where I had to adverse a lot of clients, which is basically deny or withdraw or not even take, because I'm usually the guy that gets the phone call when a deal is dropped by the lender. When a ball is dropped by the lender, I'm the guy that you call. Special referral partners, attorneys, partners like yourselves who are like, dude, this lender is not answering the phone. Can you help? And it takes me a few minutes to look at the deal because again, what did I say in the beginning of the call? It's black and white.
It's black and white. Yeah, it's pretty clear.
And your debt to income for FHA, debt to income is how much you make versus your debt. The percentage, if it's more than 56%, my brother and my sister, you can't qualify. We need a cosigner. We need to pay off debt. We need to look for a cheaper house. We need to strategize. We need to do whatever the case may be, right?
So, man, that's why you drill that process in the beginning so much, because you don't want to adverse and you don't want to disappoint the clients that you're serving. Okay, I get it.
So the proper way, right? I always say, you got to think of like when you're going to go shopping, right? In the back of your mind, in your bank account, you got $2,000, and you could spend $2,000. You have that budgeted to spend. I think I lost Alex for a second. But I'm saying, so you have that budgeted $2,000 to be able to qualify for that particular home or that particular shopping spree. Now, what you're going to end up doing is you're going to end up having to put that money. So you pre-approved yourself with the shopping. You know what you're looking to buy, how you're looking to accomplish exactly that, and then you take it from there. So that's the uber critical importance of making sure that you are properly vetted, properly qualified, and you take it from there. Okay. So
I'm there with you so far.
No, you're good. So I was saying, so if you have $2,000, right, you have in your pocket, you're ready to spend it. Right now, if you simultaneously go shopping, you have 2 G's that you can spend.
Okay.
Just like a house. If you go and you're going to check out a $700,000 home and it's beautiful. And, the missus or the gentleman wants a 5 bedrooms, 4.5 bath, right?
Mm-hmm.
You're probably creeping into the milli at this point, especially in North Jersey. But let's say, you're looking at $700,000-800,000 and you come thereafter the realtor, and the realtor says, hey, I'm going to connect you to Abdel or John Doe or Mary Smith loan officer. And we look at your profile and we say, hey man, you guys are good. Boom, ready to rock. 550. You're like, okay. Whoa, hold up. 550. We can't find anything at 550.
Yeah, it's yeah, that's cool. That's perfect. Yeah. So okay, so all right. So sometimes you come in as a buyer, like I want that $700,000 house. That's the one I want, but you might not be in those parameters to qualify and get through that process. And so what usually happens is there like do you come? I mean, when they tell you I want that house, Abdel, that's the house I want. But then you're looking at the parameters and you know that they're not within those parameters. Do you help the buyers with maybe other options and choices? Are you
100%.
do you have
Yeah.
a list of maybe houses that you could say, you know what, there's this. Is there options? Because if I come in and I said I got my heart set on that house, and all of a sudden I can't get that house, I'm gonna be left kind of empty. You know what I mean? Like, and then life, work, and everything else. It's not gonna be enough time, or maybe there is time, but it puts more pressure on the buyer, right, to go out and look for. So just to know, like, are other options presented in an event that something like that happens?
100%, man. I mean, there's, like I said, there's times where I get the call thereafter and we're going through the numbers and they don't qualify, but they want the house. They're under contract. They don't want to get in breach. They don't want to lose a deposit. There's strategic ways, right? Let's say your credit score is shot, right? And we can connect you with Horizon 360, right? Our partnered credit repair organization that can help them fix their credit. We could simultaneously also do something called a rapid rescore. So if your credit's a little on the lighter side, what we could do is a rapid rescore, which is a fancy way of saying you pay off your debt now, account 1, 2, 3. We don't have to wait 30 to 45 days for your credit report to update. We're going to do a rapid, and it can come back in less than a week.
Oh,
so
wow.
Let's say I want to be, now it costs money. It's not free, obviously.
But the option is there.
The option is there. Now, a lot of times, the majority of it, most of the consumer's issues would occur is debt to income, right? Capacity to repay the loan. So that's when we'll generally introduce a cosigner into the picture, right?
Grantor?
A co-borrower, where a co-borrower gets added to the mortgage, and we utilize their same profile, their credit, their income. They have to be in agreement, can't be a straw buyer. They understand they're equally obligated to do it. Now, this is the part that people don't know, and many lenders don't educate. The borrower does not have to live in the property to be a cosigner or a co-borrower.
That was my next question. Because
you can be what's called a non-occupying borrower. Now, when you're a non-occupying borrower, what do we as lenders do? We count your typical stuff that's against your credit, right? Your income. Not your income. Your credit card debt, your auto loans, your student loans, and stuff like that. We also take into account how much are you paying in rent. Okay. So if you're paying $1,500 a month in rent, we hit you for that rental payment, right? Against your debt to income, as if you're paying a mortgage. So you can also be a non-occupying borrower on an FHA loan and have an FHA loan and still be a non-occupying borrower to help your brother, mother, sister, friend, cousin to still qualify if you make a good amount of money that you think that extra boost. And I'll be honest, man. Sometimes I need a client cosigner who just makes $1,000. And wow. let's say the co-borrower makes $5,000.
Okay.
But automatically we take 50%, right? From the debt to income perspective, you're at $2,500.
25. Okay.
Let's say they have, they pay a G for rent and about $500 towards their car note, credit card, stuff like that. I got my G. I got my $1,000.
You got your $1,000.
Now I can add the $1,000 to that. That has dramatically helped, a lot of our consumers from an eligibility perspective. It is all done compliantly. It's not a straw purchase. The co-borrower understands, once again, they're obligated. Now, the best part about it is, let's say you're self-employed and you ran into that situation.
Yeah.
What we can strategically do is, in the future, we can refinance that same mortgage you got after 7 monthly payments. We can refinance, and we can.
So within those 7 months, you're eligible to go ahead and refinance.
After 7 months. So from a lending perspective, after you make 7 monthly payments, which is usually like 8 months later, right? Mm-hmm. After you make 7 monthly payments, the reason why it's 7 months is mortgage lenders are obligated with a regular mortgage for it to stay on the books for 7 months.
Okay.
If it's not, the original loan is called back. So we say 7 monthly payments. And For the most part, too, you also want it to make sense. We're going into a very, very volatile interest rate market. We've been in the last year and a half on an uptick. Now we're on a downtick, right? So you want to make sure the numbers make sense. So you do have the ability. Let's say you go and you file 2023 taxes. Your taxes are in the clear. You now have the ability that it can simultaneously qualify, right? You remove the co-borrower. It's essentially a new loan. A new deed gets filed, and that co-borrower gets removed, and now it's back to just you yourself or you and your significant other or whatever the case may be.
Wow.
Dude, I did a loan.
That is so good, man.
I did a loan with 5 people.
With 5?
Father, mother, 2 sisters, and one of the husbands.
And how many co-borrowers can come into play?
I don't know. I really don't know if there's a restriction.
There's more like, I guess, an awareness of the eligibility per, right?
Yeah, so
I'm assuming
the automated system needs to approve it, but again, I did 5. So technically, you have 1 main borrower and 4 co's.
4
right?
co's.
Wow,
man, what a great way to make that happen for the consumer, man. Because I mean, I know it could be devastating sometimes, in your, when you're just, you can't do it, and you have many people. I mean, look, Abdel, man, you like you did, like I said, I tell it all the time. Like, this guy delivers the information, knows the information, but you also work hard for your clients, bro. And I mean, I take my hat off to you, man.
Thanks, man.
That's great, man. Because again, for the consumer, especially for a first-time buyer, it can be a little scary, and you just don't know sometimes because you're not in the business. You want to buy a house, but you're not in the business of selling and lending money and all that stuff. So, the transparency and clarity that you're giving us right now through the whole process, and then to have the ability to say, you know what, I can buy this house still because somebody in my family who's probably earning a better wage than I, who's in a better position, can come in and help me. That's amazing. I think that's amazing.
And listen, a lot of the times I have to be the one, I'm not going to say necessarily convinced, but I have to be the one to simultaneously give the confidence, right? In more instances than I necessarily like, to talk to them and be like, listen, guys, they're in this position, we're gonna work on this strategically. We're gonna go through guidelines. We're gonna educate you, dude. So many times, right? I get exposed to so many people. They would have had very good trusted professionals. There's great lenders out there too, not just myself. I always
absolutely.
Say that. But we make sure my relationship with my clients is very like your family. And I don't say that like every other, typical person. Like, you really are. Like, we do, me, custom gear. Every single client who closes gets a custom.
Oh man, yeah, bro. I saw Chrysandra's sweater. She posted. You know what I mean? I think that was a lovely touch. I don't think I've ever heard somebody even doing stuff like that. I know. They'll leave like some flowers, but bro, you gave her the gorilla sweater.
So it's we talk about shifting focus, right? With like entrepreneurs, right? For me, truthful, all of us, right? The success of your business comes down to branding, right? Taxes are taxes, right? You got to pay. IRS releases new updated codes. We abide by them. We follow them. You go to, accountant ABC and you file $100,000, hypothetically, you're going to pay the same amount as if you go to Truthful or ABC or XYZ accountant. It's based on that code. Now, why do you use certain professionals is based on our caring, right? Like, we truly give a shit.
We truly give a shit.
Like, we really do. Like, I tell people, like, I lose sleep when I have a deal that is going south. I literally lose sleep. My wife is like, yo, like, you've helped over 400 people purchase homes in your career. Like,
wow. Over 400. That's a lot of happy people.
I'm like, it bothers me. Like, that client who I can't approve, it bothers me.
Yeah. Well, man, that's
that consumer who I can't necessarily assist. It really, really hurts when I can't help them. And we take that, and I think when you operate with integrity, and your branding is there, we've got 400 plus videos on YouTube. We throw it out there. We put the content.
Oh, absolutely. And listen, while we're talking about that, please let the people know about your channel. There's so much good information on that channel. Go ahead and tell us that.
Yeah. So my whole branding is Got Mortgages. So youtube.com/@gotmortgages, Instagram got_mortgages, Facebook got mortgages, TikTok got mortgages. We talked about branding and the successfulness of entrepreneurship. That's what it's about, right? That's what it's all truly about, is staying consistent with your branding. If you're a professional out there, if you're a realtor, you rep KW, Remax, Weichert's, EXPs, great organizations. PRMG is a phenomenal organization. It's, like I said, the only company I've ever been licensed with, which speaks volume to how the industry changes. So many different lenders and realtors jump ship.
PRMG, what does that stand for?
Paramount Residential Mortgage Group. So that's essentially my sponsor. That's my KW, Remax, Weichert, right? But everybody knows me as Got Mortgages, right? That's my brand. That's what I rep. This is actually the first time I'm wearing, well, not first time, but this is me repping my organization. So I'm always in a PRMG shirt or a Got Mortgages shirt, which just speaks volume to my job is to make sure I have systems in place to assist the consumer, right? And systems in place to assist my professionals and assist my partners. And we implement that stuff, man, and we rock and roll. Our systems in no way are 100% perfect. Anyone who says their systems are 100% perfect, isn't necessarily being truthful, right? I just had a situation, a deal literally that just closed yesterday in Kearney with a referral partner up north. And, we were going through certain shifts, and we talk about guidelines, right? And I love this stuff. Remember, I also own a mortgage licensing school called Got Originator. So we do licensing and coaching, gotoriginator.com.
Now, when you say you do coaching, you're coaching for
loan officers.
Loan officers. Okay. So
Yeah.
this is essentially a school for loan officers.
It's a school for loan officers, both to get licensed and to get coached. Now, very, very exclusive on the coaching side, because I'm essentially accessing you to everything that I myself am doing as an originator as well. Right.
Okay.
And that's one thing, there's great lenders out there, but a lot of them have a difficult time cultivating new loan officers, right? We have 10 loan officers on my team. So I am obviously, the branch manager, the team leader, but I'm their teammate, right? I tell them, I'm not your boss. I'm your teammate. We're partners in this. Our goal is to help the consumer. Our goal is to help our partners and our professionals, right? We have our team of, sales admins. Our goal is to put systems in place to help the realtors get their contracts drafted, to help the phone calls being made, to make sure the consumer is touched, to make sure certain avenues and systems are being done, to host podcasts. Like, this is my fourth meeting. It's now 9:30.
It's your fourth meeting, eh?
7:30, 8, 8:30, 9 o'clock. And I have another one with actually Jonathan right now.
Okay. Shout out to Jonathan Hernandez, the CEO of Truthful Taxes. And of course, if you see the emblem on our right bottom corner, it is Truthful Taxes. We are powered by Truthful Taxes. And all of you who are out there right now, whether you're a tax partner or a client, taxes are around the corner. Tax season is right around the corner. So I hope you are putting into play the right systems, right? The right systems in order for you to have a successful tax season as prepare, and obviously to make sure you're organized and prepared for your tax prepare. So clients and preparers, like, you got to get ready. Tax season is right around the corner. We'll get into that more and more as the days fly by. But yeah, Abdel, what's something that stuck out, right? And look, man, we're getting the full scoop on how Abdel operates. All right. I'm loving it, bro. You're a team player, you're consumer client oriented, and I think that's very important. A lot of the times, like I say, the processes can be a little bit scary in a sense. You're talking about big money, you're talking about big commitments. So hearing the inside scoop on how you run your team, bro, is pretty cool. And something that slipped by the cracks, that I wanted to ask, it was mentioned, it was a straw buy, right? It's not a straw buy. What exactly does that mean?
So, straw buyer. So it happens very commonly, right? But what that basically means is, let's say you want to buy a house. And I'll use you, if you don't mind, for an example.
Of course, man. I'm looking to buy one.
So if you're looking to buy a house, but let's say your credit's shot, right? Or your income's low.
Now, what's the parameter on it? Shot.
Yeah. So
What's the number?
so FHA, the sweet spot is 620. Now, HUD guidelines allow you to go as low as 580, which we've done before. I actually did one at 576 with an exception.
Oh wow.
So 580 is the minimum. Usually 620 is a sweet spot where you don't need to bring in extra money, show extra reserve, show extra what's called contributing factors as to, you've been at your job for a long time, your income's there, you just went through a nasty divorce or whatever. So
Okay.
small buyers say
A security kind of run.
yeah.
Type.
So that's usually what happens when you're between that realm of like 580 to 620. It becomes something called manual underwriting. The automated system won't take it. So you have to show at least 2 to 3 contributing factors. And we could be on here all day when I talk guidelines, because I know that, like, people know me as, oh, this guy just does, videos and social media and this and that. But I can
They don't know.
I can confidently say, man, put me in a room, on Jeopardy or Spin the Wheel, whatever damn talk shows are nowadays. And I know guidelines, and I'm constantly learning new guidelines all the time, right? Like that deal I told you guys how we kind of sort of dropped the ball. That closed yesterday. The client I asked him during the pre-approval stage, you have less than a 6-month gap. Yes, blah, blah, blah. Have you been working consistently before? Yes. What was the job? We took it all down. Pre-approved the client in April, just closed yesterday. So talk about follow-up, right? We consistently kept following up. What we ended up doing thereafter was we set the proper expectation with him. We actually found out that he was at the job from a gap perspective more than 6 months. That's a problem. Because although he's been back at his current job for more than 6 months, which is the minimum requirement, I didn't read further into the guideline that you have to go back 2 years from the employment, which the guy told me he had. 5 different jobs in those 2 years.
Oh, man. So there was no sense of that contributing factor anymore. There was no security there.
We got it done, right? Because we had to go. I mean, we had to go far back to 2018 from the gap 2 years. So we were literally 2020 all the way back 2 years, because every single time you have a gap, we have to move the needle back. And we're talking to employers. They're like, we don't even have them in our system. We updated our system 3 years ago. So,
oh man.
But we got it done, right? And we actually closed earlier than closing. 99.9% of my closings close way before closing. We move ridiculously quick because that full vetting process that we spoke to earlier is done from the beginning. It's done from the get. So we're doing all that stuff immediately, right? So you're not dealing with it after. So when you're coming in as a consumer and telling the professionals we can confidently close in 2 to 3 weeks, when another institution needs at least 45 to 60 days, dude, you're getting that competitive advantage, right?
Absolutely.
And we kind of employ those certain strategies and tactics and learn and tribute guidelines. I try to digest it in the simplest terms, and then, relay the information over to our professionals and to our partners and clients in the simplest terms, and we take it from there.
An FHA loan, for those that don't know, if you could just, I guess, break down the acronym. And
so FHA is Federal Housing Administration Loan. It is insured by the Department of Housing and Development. The bank is giving the money. That's a misconception people have, but the insurance is coming from the government, from HUD, which is why banks are a little bit more lenient to have higher debt to income, lower credit scores.
Yeah, because the money's insured, right, by the government, so they're a little more privy to. Okay, we'll take a little more chance on this. Exactly. Awesome, and I'm pretty sure that maybe I'm wrong. I don't know, right? But the FHA loan is probably one of the lowest interest rates you could get, right?
Very good point. Yes. So another one, FHA and VA, both government endorsed loans. VA is endorsed by the Veteran Affairs, which I do a lot of.
And you are ex-military, right, Abdel?
No, I am not.
You're not, man. You sure look like you're an ex-military guy.
6'2", 295, but I am not. A lot of that's probably why I click with a lot of the vets and my boys, right? But so the reason why the coupon, it's called coupons, right? The mortgages, the bonds on them are a lot more lenient is because of this insurance. Plain and simple, right? and you have the ability to do so. And it's big differences. I mean, there's a lot of clients, that partner that we just recently closed, right? I was more or less nudging to go FHA. And we did certain strategies where we present an offer and strategize, you know what I mean?
Yeah.
But don't matter, bro. We move quick. Appraisal was done in a week. Loan was given in a week. Loan approval was given in a week. And that is a self-employed borrower who always adds, again, additional paperwork. It is not a streamlined creme de creme W-2 borrower, right?
Yeah.
Which, let's be completely honest, the majority of those aren't coming to independent mortgage bankers like ourselves, right? They're walking into
the bank.
Chase Wells TD,
Mm-hmm.
who are great institutions, but have their stereotypes that, you know, sometimes come true in terms of hyper, you know, something called additional overlays, where, you know, in one point, some institutions, not to name banks, but some of them won't touch a client who's got a 620 credit score. They're 650 and above.
Yeah, well, thank God. Thank God for guys like you, man.
I've had that where I've gotten a call. I look at the deal. They're like, hey, you know, bank won't issue an approval. I look at it and I'm like, yo, what am I missing? Like, is there something that I missed? And then I'm like, no, just the credit score is not the greatest, but, you know,
everything else is in play.
And HUD allow us to take that risk. And our institution, one of the reasons why I love PRMG is we have like no overlays. And if we do, I can get an exception for it. And that's one of the strategies that allow us the ability, like I said, understanding guidelines, educating the consumer, going around it, trying to avoid issues that we've run into in the past, right? We're always going to make mistakes. Anyone who says they don't, they're full of it. But we try our best to obviously limit anything that may pop up, and then we simultaneously take it from there. So,
I mean, look, you know, when you're going into to buy a house, obviously, you want to have, like you said, all these parameters in play. How often do you run into these credit problems where the credit is low? Is that the most that you run into?
No, I would say for me, sorry, I'm just texting Jonathan.
It's all good, man. The gorilla's working 24/7.
I would say the capacity to repay the loan, the DTI. That is the most common thing, especially when rates went up. Rates go up, payments go up, DTI goes up, right? But I would say it's capacity, DTI, the credit, then the capital, where's the money come from, and the collateral, finding the house, right? In that order, right? In that order. Where the DTI is the hardest thing, because listen, if you don't make the bread, what are you gonna do?
How are you gonna pay the loan?
Yeah.
You can't pay the loan, you can't buy the house.
If your credit is shot, right? You can always fix it, right? Pay your utilization down. I don't want to say wait 7 years, but, you know, late payments stay on your credit for 7 years, could potentially fall off. You know, do a rapid rescore like we discussed earlier, which is a quick recast. But the capacity is usually the hardest thing, right? Because if you don't make the money and you don't got a cosigner, you can't really do anything unless we explore, like I was sharing, bank statement loans and a DSCR loan or something like that for our investors that are going to allow us the ability to pivot. But again, those, now you took care of the capacity issue. Now you want to make sure your credit's good. So a combination of different things that we look at and we take it from there. So,
all right. So guys, man, I hope you're paying attention. My people on IG paying attention. Make sure you check out this episode, because if you're looking to buy a house, I mean, you want to be listening to what my man Abdel's got to say. And if you're looking really and you're serious and you're ready to step on the gas, make sure you check my guy out, Abdel. And I'm not going to kill the name, but Khawatmi.
It's all good.
Khawatmi. All right, my brother Abdel Khawatmi stopped by, the gorilla beating his chest and letting you know that you might be eligible to buy a house. And if you are interested in buying a house, go check him out. YouTube channel, IG Got Mortgages. Come on, you heard of Got Milk. My man got mortgages all day, and he works hard to make sure you get approved. And that's the people that you want to be, doing business with, man. So Abdel, we duly appreciate your time, you coming on, man. Listen, we'd love to have you weekly if possible. It's just so much benefit from the information you've given me, and me, and that I'm looking to buy a home in the future, maybe 2024, maybe 2025, I don't know, but you've definitely given me more confidence in all the stuff that you've given us today. So appreciate you much, brother. And who knows? You know, we're going to have this weekly thing, man. And the Gorilla is going to be in action here on Trupod every week. So we look forward to that. I appreciate everybody who tuned in on the IG and on the YouTube channel. Let's check to see no woman or man left behind. Check out the comments. Looks like we're good. All right, guys, man. It was the Gorilla, Abdel Khawatmi, right?
Boom.
Boom. I got it. All right,
time.
man. Listen, this is the Trupod morning show, the morning hustle. Thank you for stopping by. Gorilla, let's get at it.
Why they talking like they go? Just don't provoke me, cause I don't need no cellmate. I'm in a 2-seat, doing drives like a mailman. This ain't no hoopty ass, she riding, she's a hell yeah. No, I won't lose sleep about no pussy, I'm like farewell. Yeah. I'm outside. I know how it feel to see your homie switch sides. I know how to put that Rolls Royce shit in drive. I know how to load a clip and shoot, we gotta ride. You ain't gotta lie to me, baby, no. You know it's a vibe every time we